Good morning, traders. Welcome to Trade Setup and the live stream for the 4th of November. All right, this is running out of Queensland today, so I've got to the nice sunny state. Finally. Uh, just bear with me one sec. We've got an echo. I hope we're all doing well. Not a big night last night. The markets were down again. As we expected, just continued its run down. Just bear with me a tick. Here we go. We're organised. So the markets sold off a bit more last night. Continued from the previous nights on in the US. We've got more uncertainty. I think the potential for a Trump victory is starting to scare a few people, I'd say. The markets don't take kindly to that, and we also got potential rate rises in December, which we all expected probably put a bit of a cap to the market, a bit of a sell-off prior to that. So I think that's what's happening at the moment. We'll have to see how that plays out. The ASX was, I don't know exactly where, it's down 22 at the moment. So that might be continuing its way south. We'll just check on the actual chart. All right. So don't forget, if you've got any queries, if you've got anything you want to have a quick look at, just send it to support@tradesetup.com.au or just put it into chat. Anything at all, we'll have a bit of a squiz at it. Whether it's a currency, share, index. We'll also have Davin. Davin will be joining us a bit later on just to look at the gold stocks. We're going to go through some of those again, just his opinion on what he thinks is a really good play in the gold market at the moment. So we'll take a look at those again. You can see, having a look at the ASX here, it's not looking very nice at all, really. You can see that uptrend that's really coming right down to that support zone at 5,200. Last couple of days, it's just tested through there on the open today. Had a slight bounce, but it's looking fairly negative. That major lower high, if that comes into play, that should really push down. We should, maybe bounce, get a lower high build again, and then push our way down to new lows. Potentially testing down towards, it's a long way off at the moment, but 49.50, that sort of zone, where we find a bit of support. Who knows? But at the moment, it's not looking the best. Could easily push down a lot further than that. Take out, towards these lows around 47, 48. Have to see how that goes in the coming few days. Let's just go through a few other things here. We'll take a look at the Aussie dollar as well. If I can just find my charts. Just bear with me 1 second, guys. Oh, here we go. Where would the charts be for those ones, do you think? Just bear with me a sec, guys. Just got to get the few charts up. Alright, guys, we're back. Just wanted to get up the Aussie, and we'll start off with the ASX. So this is a 30-minute chart. We've had that push down into that overnight low. We pushed down to that 51.75. We just rejected that zone at the moment. So it'd be interesting to see if that 52.40 can hold, and we get that lower high, somewhere in here. We maybe just bounce and then roll over towards the end of the day. We'll see how that goes. But again, like I said, the dailies are not looking too positive, so that could just continue on its way lower. We'll just see how the price action goes for today, but it's capped at the moment. The key level is really 52.40. If it can push up through there, just make a bit of a push up through there, it can maybe contract this leg lower. But I think it's got a lot of work to do yet. I don't really expect that to be happening today. I expect more of, maybe contraction high, and then tonight we could just continue on, roll over, make a lower high, and then go back through 51.75. This is the CFD, don't forget. So let's take a quick look at the Aussie also, just to get an idea of what's happening there. Right, so this is a 1 hour chart. We've got quite a bit of data pushed in there. So we've got these highs that have been tested a few times around that. We got one at 77.10, and then up to 77.30 to 50 zones. So that's a major high. If we can just get all that in. Whoopsie daisy. Yep. So we've got that in there. So we've got those highs at 77.50. Rejected that quite strongly all the way down to 74.40, and then we pushed back up and retested that 77.10 to 15 zone, and we built a major high low here, And we can see we've had a few good moves up, back up into 77.15 on the back of CPI, stronger than expected CPI, and the RBA statement just recently has pushed us back up to that zone. Have been rejected off there in the short term, but if we just concentrate on this right hand side of the chart here, we can see we've rejected there, built a higher low, pushed back up. I think that was the CPI. Actually, that was CPI number. Pushed back out, washed out these major lows at that 75, 80 mark. Washed that out, and then we've bounced back up there. At the moment, that's just on the hourly chart. We're building those higher lows, and we've got this trend. I'll just get my segment up there. We've got this trend up at the moment, which is holding. Excuse me. And you can see the MAs are really they're pushing back up. So I think the next key level we're really starting to look at is back up at excuse me, 76.90 to 7700. So at the moment it's looking quite strong. We've got these key higher lows holding, just the shorter term ones, and we were looking to push up through that, back up into 7700, potentially up to 7730 if we wash out some of these highs here. But that's looking fairly strong. It is getting towards overbought, so maybe it's a bit extended up in this zone, but we still some good price action there. All right, let's just go through. We'll go through some of the ones we're holding at the moment. ASX, that's had a bounce. I think it was yesterday, off those lows towards 45. We're looking for that push through 45, potential a partial exit there. That's still on the cards. There's no reason why that can't really wash out into that zone a bit stronger. It's around that 4600. $46 mark at the moment. We were short from about 47.01. So that's still looking good. We've got that really strong move down to that support down there. So it's still got a bit to go, I'd say. We're looking for that partial exit, and we'll have to see how that plays out today in the next couple of days. But I think the negativity around, especially in the US, that's going to flow into our market. We're at some key levels at the moment, just washing them out potentially. So if we are heading south, I expect ASX to continue. Telstra's still around that 490 mark. If we go to a weekly, just remembering the weekly, that's really looking, it's not looking that great. So we're happy with that. It's got a lower high around that 520 mark after this big contraction back up to 580. It's rolled over, pushed through $5, just bounced a bit, and that's not a strong move up at all, like we said before. And that's obviously the reason why we like this short here. And it's got some good run in it, I'd say. If you go to the monthly, that could be a major contraction, a major push lower before it finds any sort of base there. So that's still looking good. RMS, to me that's a fantastic looking chart. Really like that curving. Maybe if we just get that up there, that's still looking really, really good. So we're happy just to let's get it on a bigger chart. So you can see that price actually sort of curved up, and then it's really pushed up hard. It's pulled back, contracted a bit, made the higher lows. It's gone again, had another good strong leg up. Contracted, more consolidation, contraction in there, building those minor higher lows there, and it's pushed up through some highs and had that good strong move up to 64. And potentially we're looking to this type of price action again. We could just pop up, pull back, build a higher low, and then go. But we're looking for that good strong push up into the highs through potentially up to 64 and through that. So at the moment, comfortable with that. Nice looking chart there. We'll just see how that plays out. What else do we have here? Neo Metals. We're starting to have maybe a bit of difficulty up to 37 to 38 mark there. So we're still building those higher lows. That's still holding quite nicely there. We'll see how that goes though. But if that is a lower high there, that could cause a few problems. We may push through that. What do we got? The lows at 33.5. If that's the case, then okay, we'll probably be out of that one. But still, that price action is not too bad. If we can get that to push up through that resistance up there, highs around 37.5, that'll be good. I think that could really take out some of those highs there, those lower highs, push back up to 48 into 50, but we'll see how we go. All right, I'm just going through a few others there. TGR, that's another short we've got. It's been pushing lower. I think we're from 388 or 86. At the moment we're 379, so that's still you know, that looks really nice on the daily. You've got that pressure to the downside. We've broken the lows, say through 390, 380. We can see that by that gap down. I think it was a few days ago when we did enter that. That's really putting a bit of pressure on the downside there. And on the weekly chart, you can see that's a potential major lower high. So that could really extend through 350 down to 325 and even beyond that. We'll see how that goes. Okay. Oh, yep, Telstra, we've gone over. Okay. All right, let's just go through. Is anything anyone wants to have a look at while we're just here? Before we might get Devon on very soon. He just wants to go through a couple of nice gold stocks. If he doesn't break the chair behind me. So is there anything you want to have a look at, guys? Just whack it in the chat. At the moment, markets, like I said, they're not looking the best. You know, we could really get a decent enough sell-off here. Yeah, like I said, into that 5200 is looking a bit extended, but there's no reason why it can't just really flush out those lows, really take a few people out. Clement, okay, PME, Pro Medicus is setting up for a swing trade. Let's have a look at that then. I've never looked at this one before, but we'll have a quick look. Was it PME? Okay, let's draw that one up. That's, yeah, it's not looking too bad. That's similar price action we can see in the past. Let's get our little drawing tool, if I can find out where I put that. PME. I don't even know what do they do, Clement? I haven't had a look at it, but just get all my pretty colours up here. All right, this is what the first thing I really did notice was that contraction down there, and that top of price action is potentially what we're seeing again through here. So I think you could be right there. Like, it could have a lot of upside to it. Just quickly start with a weekly. Just go back a bit. Look, on a weekly basis, that's really come off, 50 cents. It's had a good run up. Obviously, had a very good run up. Strong move up. It's contracted lower a bit, up down to 2, and we had another good run up. Some major contraction, but it's really held those higher lows in here, which is what you want to see. As soon as you see, you can't see the market push down to new lows when it's contracting. Then you just want to be on the guard for a potential push up, and you want to see those higher lows build, and then just where you can pick a nice breakout from the daily, I guess. But dragging it down, then it had a really good push up from 3 up to 650, and it looks like we're in at the moment. From a weekly basis, contracted quite a bit, and we're getting to that zone anyway, where maybe that move down's running out of steam. We don't know. Obviously, just using the stochastics for an idea of where it could pull up short and where we should be looking at it. So I think you're right where we're getting into it now. We're getting into a good zone, so that weekly's looking quite good for me. I don't mind what we're seeing there. If it does, if this weekly continues down, we push through 5, take out this low, but these are some serious rejection candles too, and we're getting into sort of that zone around that 5, just below 5, is where it's sort of broke. It's only a minor breakout previously, but yeah, it's shown some good signs. Go back up to here. So I think that was that same area 3. Sorry for the weekly, is that right? No, 3's right back here. So that's that minor level there. We just said, held the higher lows. So that type of price action is nice. You could have got a good little, it gapped up there, so it's probably a bit tough to get that trade. But again, you're getting that similar type of price action. So it seems to be repeating itself, and that's not too bad. Just to keep an eye on that. So if this level does hold 5, obviously you're right. You really just got to drill down and look for an entry now. So if we can get this top price action, say that's at 5. We've had a little sort of flush of that level, come back, and we sort of retested it just up here. Now we're just looking for a breakout there, so potentially you just want it to move up. Whether you get it through that level, for me, my risk would have to be right below 5, which is okay. You just got to structure your trade that way. Just remembering what you're risking on each trade and how you want to play that. Or once it breaks out there, you don't know. For me, I would like to see not more price action to say that it's not just going to go into consolidation and do this type of thing sideways for a while and then you get caught just sitting there waiting for it. You want to see, I would like to see maybe a pullback, build that higher low. Always like the higher low. I like these sort of style things, setups where you can just get into that zone in there, whether it's just off the high low, potentially front running that move, or if you're really confident that's going to keep going up, up to 660, then just you can buy it straight through this breakout at 540 or so. But that's my style of trade, and I like to see those high lows build, because that could easily pop up through there, push back down and flush back out through $5. You don't know. Seeing those high lows is a good sign for me as the strength that I want to see. If you can notice, there's a really minor one in here too. That's I do like that too. Let's just draw. I like using a bit different colours. So if you can see that, it's a very minor high low. But essentially that was a nice little setup. You popped up towards the resistance, built a minor high low, and that, for me, back at that stage, could have been a nice little entry through there. Yeah, and then you're front running any sort of weakness that's coming through, and then buyers stepping into the market at higher prices. We got in sort of more the unknown than the known. As you get up to this sort of level, it's becoming more the known. We know it's broken out. It's pretty clear. At this stage, we don't know. We've got a very small risk on that trade, which is good. That's sort of breaking out of that contraction. That's what we're looking for. Be nice to see that type of price action there. But anyway, that's a good one to keep an eye on too. Thank you for the heads up there, Clement. We'll be watching that one. Anything else, guys, that you want to whack in quickly? Hope everyone's doing well in the markets too. Alright, let's just have another look. Down 29, so the market's still edging a bit lower. How's our golds going? Yeah, look there, a bit mixed at the moment, still looking quite good. I think we'll get, Davin's going to go through a few in a minute, so of what he's looking at. This is one I've had for a while, that's not looking too bad. MVP, DRA. It's very lightly, this is a personal one I've got here, looks nice. RMS still going strong. There's a few in here that, actually this one, WiseTech, I think we're out of that now. Out of that yesterday actually. But that was a nice little run up. We just locked in. It's still, even though we're out of this one here, it's still not looking. If we just get that up, I feel that's still not looking too bad. I just like to protect, markets away any sort of longs. I'd rather just err on the side of caution. I guess I'm not as an aggressive trader as I'd probably like to be, but yeah, that's my style. I guess just getting everything. That still looks good though. You can see that uptrend's holding. We've had that leg up, previous leg up, and inside high here's pulled back, made the higher low, and then gone. You get the breakout through here. So I think we got in around this level here previously, or maybe it was up here. Yeah, anyway, but that recent trade was through 580, so I'm happy just to protect that then, because we could easily get a contraction lower, and if we start seeing that similar type of price action over, well, let's just do that a bit better. So we've got that move up. If we get this price action here pulling into support, maybe retesting with a minor higher low, and then we start going again, that'd be nice to reassess that and just get that. You don't know where that's going to be. It could just pull back here. Okay, then we missed out, but we'll see how it plays out. Still looking good. What else have we got? Yeah, anything else someone have a look at? Okay, just a quick question too. How is everyone finding the app, going through the app just to get onto the chat functionality? If it's all working good, I mean, if it's not working, you're not going to tell me, but just let us know. We're just continually trying to improve things. Even if you want to send an email through to support@tradesetup.com.au. All right. let's get in about a minute or so, a couple of minutes. I think Davin's still finishing his coffee. trying to finish his coffee. So, all right, let's just. So, anything else, guys? I said no. That's good. It's good. Let's just see if anything else here. Maybe have a quick look at gold itself. Just have a bit of a rundown of gold. Sorry, guys. I'll just get up a spot gold chart, just so we can set the stage, I guess. See where that's moving. Alright, we'll start on the day and just drill our way back again. So looking at that, that still looks good. I know we've got a bit of overhead pressure there, but it's coming up to that 13.05 to 10 mark, which we previously said. It still looks, yeah, it looks good. You've got that move through. That was a daily, yeah, major sort of resistance zone. If we can draw that up just quickly from this low, so we can see that move through. That it really just coincided with a bit of a daily set off, but this is the key level that we want to see hold, and it looks like so far so good. It is holding. Support through here, major support. We've got another one, you know, building through this. What's that, 1250 as well, which has bounced off quite hard. So, you know, really longer term, if we can see, you know, maybe that holds. If that's the case, and then we start maybe working our way down, and we just want to see that type of price action. If we see that, I think it's on for young and old. Really, it'd be good. Gold could really hold those highs, hold above 1250, and then go from there. But we'll see how all that plays out. All right, just bear with me. I'll just put you on mute, and we'll just get Davin on, and he just wants to have a bit of a chat through some gold that we've been talking about for a while now, and really some really nice setups that we're watching and we're going to try and focus on. Anyway, just be 1 minute.
Okay, hi guys, Davin Clark here, just jumping on from Braden and to have a bit of a chat about the market. Hope everyone's well and their trades are going well. One of the things I guess that has been difficult in the last month or so, what we've seen is especially the high PE stocks, the ones that have been sort of market darlings over the past few months, have really taken a negative turn and come off quite hard. So it's some of the high PE stocks, but also the ones that have that are reasonably high paying dividend stocks have come off as well. So we've actually tried to adapt to the market conditions, and that's the reason we do have a couple of short trades in the market. One of those ones, Telstra, that we've been following, has moved down through the $5 area. So we're looking to see if that gets some continuation to the downside or whether we start seeing it move more into a range. But we do see the potential of further downside there. So we'll work out with our money management whether we, and we'll obviously send this out as an alert, whether we take off half the position and take some profit on half, or whether we try and open it up and make the most of the continuation move if we see some more evidence of that. Okay, so there's a couple of things I wanted to go through today, and especially a theme that we're starting to see with some of the smaller gold stocks, and they're starting to show a little bit of promise after being quite dormant for a few years. We're starting to see some price action there. But just noticed a message there from Sharon. So just on GEM, I'll just bring up a chart of that and we'll have a bit of a look at that first, and then I'll go through some of the market structure that we're looking at and the potential for some, I think, early trade selections before price actually follows through and we get some stronger movement down the track. All right, so let's bring across GEM. So Sharon, love the look of this stock that you've got here. Nice build up. We're looking at where we from sort of mid-August through to now. We're just seeing it break towards its gap. Obviously, it gapped down, and we've had a reaction there. So the gap high points around where it's a cent or two off at the moment, that 334 area. Structure that I like is obviously it was quite negative around between March and July, and then we did get the drop. I'd have to have a look at the reasoning behind that, as I haven't been looking at this stock personally. But what we saw here, and I've just got to remember how to use these lines here. So let me just draw up a couple of little bits and pieces here that we look for in the markets. So what we got was a nice acceleration mode up here. You see the 20 and 50 crossing over and some upside, broke the highs. So a bit of strength up from the 340s up to the 410 highs, or what proved to be the highs. Started to see no follow through the upside. One of the things we look at is high lows, high highs is what we're after, and we see the momentum start dropping off once we hit the 410 mark. Price reacted downside. We got the move up, and it really failed to drive higher than that previous high. It did make some minor new highs, but if we want to see strength, we would have seen it move up a lot higher on this next move to the upside. The fact that it failed here, that's our sort of first sign of weakness. Price comes down, tests its lows, holds that little higher low in there. So sometimes these are good risk reward areas, but the fact that the biggest structure is starting to fail here tells us that we have to be a lot more wary. So even though that's a good setup because of past prior price history, we'd be a little wary about taking trades at these areas. Price did move up a little. Then something that we also look at, so the high was made here at around the $4, and then a second attempt at that high failed again. So that retest, fail tells us that there's short-term weakness, and the fact that we're not getting upside momentum and a lower high than the previous two major highs tells us that there is more of a likelihood that we're going to get follow through weakness here. So these are the areas that we like to look at that minimizes our risk for potential trades, and gives us some upside. It hasn't really broken through to new lows as yet, so there is added risk on trading short in these areas, but this area, what we try and do is box up our risk to make it quite a small area of risk and our reward greater than our risk, and doing that consistently is what we see as being successful with our trades, and that's what our trading selection and philosophy is all about. So let me just try and find the right tools here to show what I mean. So a rectangle here, and that is not what I'm after. Control F12. Here we go. So when I say box up our risk, what I mean is what we want to try and do is, and we need to give it a little bit of room here. So if we're looking to enter for a short trade at 388 and our risk is 404, what we're looking at is around, get my maths out, 16 cents risk. So what we want to look at is potential rewards got to be greater than that 16 cents. Now, we could see this as a potential first zone, so 64 from 88, around 24 cents to 16-cent risk to our first level. But because this is a topping structure, what we'd assume would be that there would be greater downside. We'd expect that this would be broken to the downside. So if we were entering here, the initial risk is fairly high because we're entering off highs. MAs haven't yet crossed over. We tend to get most of our structure when we get crossover and we're looking for reactions as price breaks below the 20 and 50s. So price didn't really set up well here for a trade. Ideally, that's our key entry. But what we do find is some people like to be more aggressive, and we think this is fine as well, as long as you understand your risk reward. And so for aggressive traders that see a failure to make new highs here and then a secondary failure, limit our risk to a very small loss if we're wrong. And because we're entering off a high point, the downside reward is much greater than our risk there. It's just a higher probability that we might get washed out here before it has a continuation move to the downside. So looking at the reward there, potentially a trade, and with this gap down, unfortunately I just don't have the what happened at this point to see what caused the gap down, but that was our downside reward. Could have been substantial to the risk in that particular case, looking at it after the fact, of course. It's always easier when you look at market moves after the fact and show how you could have made all this profit. But what we try and do, obviously, is we want to make money from trade setups that occur at the hard right edge, and so always harder to do it this way. So let's look at the price action here, Sharon. What we got is gap move off the lows there, so looks like a bit of over pessimism there. So that's a good first sign that we're going to get some potential movement later down the track. The fact that price rejected off 260, it shows me, and also the fact that it's never got back down towards this 260 level, that this is a no-go zone for sellers. So let me try and remember how to, so I'm going to have to do it the slow way, Control F12. Price never moved back down and retested the lows here. So that's telling me sellers on 2 attempts here have failed to move price down into that zone. So we got our first, excuse me, got our first low here. Price move up. It's still failing to make new highs. So buyers don't have enough strength at this point to break new highs. We're not seeing sellers taking control yet. Price moves down, makes a new low, but doesn't get into this bottom zone. So what that's telling me as price moves up here is the fact that there's no sellers able to push price to those lower levels. Also, the bars in here each day, there's not strong selling coming in here. You can see buyers and sellers are fairly evenly matched with very small price bars, telling me there's buyers aren't able to push markets hard, and sellers aren't able to push markets hard. So what we're looking for is when we start seeing higher lows and then we start seeing accelerated price movement. So we get price move up, nice strong solid bar. This is really the first upside strength bar in the market since the initial reaction off the added volatility when we got that sharp drop. That was quickly negated, and then we went back into a range of just buying and selling, matching each other out, and nothing much happening in the market. But what we're seeing over time is the fact that we're getting this large area of higher lows. So sellers are now not able to push price back down. What I look at in the markets and what Braden looks at in the markets is how buyers and sellers are reacting. And what we find is that this helps us to understand when we've got the opportunity to find potential for buying pressure to overcome selling, and therefore price moves up. And then on the flip side, we're looking for also the opportunity where selling overtakes buying and there's strength in that selling. And if we can short it using options or warrants or using CFDs, that allows us to be able to take advantage of downside moves as well. So in this case, what we're starting to see here, and I think Sharon, this is what you're seeing, these higher lows and nice little saucer U shapes, which I like to see. Higher lows in here. This potentially, as we've seen from the short area, we box up our risk. And get my third rectangle. I'll work out how to do this quicker as I go. So that's our risk. Potential reward could be up here as we move up to fill the gap initially around that 350 mark, and next high is up around that 410. So we've got two levels here where reward is greater than risk, and for me that is an ideal structured trade that I look for, and it's all about just understanding price action and just reacting to that. I find concentrating on this as a trade structure, number one, which is one of the most important things, is limiting risk, and number two is about finding reward greater than the risk that I take. So it's potential reward versus structured risk, and doing that consistently. We're going to be wrong, and quite a few of these trades aren't going to go. They'll rebound and come back down, and they'll stop us out. Sometimes it can be for being too early in a trade, and the other time is that there's just no more buyers. If there's no more buyers willing to bid at the higher price, then the price of the market does reverse and falls down, and it just means that there's failure. But the thing that we're looking for is what we want, and these are the two key things. We can't have an ego trip when we're trading. We can't expect every trade's going to be a winner. So we need to expect that trades will be losing trades, and be ready for that, and make sure we've got a preconceived plan to be able to take losses. I've watched a lot of traders over many years, and what I've found is that traders generally fall into two categories. The first category is traders that can't take a loss, and usually that's males, me included. I find it very difficult to take losses even after 14 years of professional trading. That's probably the hardest thing that I've found, and where any big loss I've ever had is because I get a bit of an ego and think that I'm right, the market's wrong, can't take a loss. So once you are able to put in place plans to be able to deal with that and understand that that is a weakness with your trading, then that helps you to then move to that path of being successful as a trader. So being able to understand your risk before the trade's placed, being able to put in place either a stop loss or manage the trade by implementing a stop loss when price does that, is the way to go. For me, because I do know that I've got weaknesses in placing stops, what I try and do is have a hard stop that I put in the market. So I'll put in one further away than where I expect price to go to. So my hard stop might be something along the lines of, say, 302. So that's the stop I actually put in the market. Then what I do is I look myself at price action, and manually I'll put in a stop when price hits the bottom of that zone. Now, if I find that I'm overridden by emotions, I've got the hard stop that's an absolute. If I'm able to trade well, and I might see price action move down to, say, 310, and decide this trade is no longer valid, it shouldn't have done that. If price was strong, it should have gone a lot higher. So what I'm doing is I've got a thought process where I'm acting rationally with the trade price action, and that might mean that I'll exit a price earlier just based on the price action. But I've also got a hard stop in place for if things turn ugly and I find that the emotions get the better of me, and there's a hard stop to just absolutely take me out of the trade. So that's the way I deal with a weakness that I know I've got in my trading. Whereas I guess from my point of view, I find offensively where I'm adding to positions and I'm riding winning trades, I find I do that quite well. So I can generally manage that without having to automate that process. Whereas some traders, though, they can actually take stops very well, but generally, if they can do that, what they tend to do is cut their profits quickly and too quickly. So they finish up in this break-even rut where they're not able to get consistently those big winning trades, which you need to be profitable in the market. So for those style traders who are probably the opposite to me, what I tend to talk to them about is opening up their trades, maybe taking a portion off, so that then they take all the risk out of the trade and letting half their position run. So that can be a way of dealing with people that struggle to open up their winning trades. So just a quick rundown, offbeat, I guess, a little bit, but just talking about some of the things from the emotional side, which is probably as you trade over years, you'll find that's probably one of the biggest hurdles for being successful. That's something just to have a think about, those two particular things. All right, let's move on. I've gone a little bit off course there. So we're going to look at a couple of stocks and just look at, in particular, some of the gold stocks. I'm starting to see a bit of a pattern. There's no guarantee, like anything in the market, that this is going to play out, but something that we're looking at is when we get this sort of structure, exactly like what's happening in GEM, we like to see these long-term structures build. Often a nice base moves into an accelerated phase, which is like a phase 2. So what I'll do, I'll explain the structuring behind it, and then we'll look at the stock. So I'll just get some clear space to draw. And so this is the sort of thing I want to see is, and we look at this as 4 stages. So what we see is basically a basing sort of move. Now, obviously the market doesn't just go in a straight line, so it's going to make this sort of structure. So this is where buyers and sellers are matching each other out. Then what we want to start seeing is a bit of a skew to the upside, where we're getting higher lows coming up, and sometimes it's never as easy in real life seeing this than when we draw. But what we're basically trying to see is just starting to see the fact that sellers can't push to new lows. Now, this often will precede this sort of movement, where a lot of traders will see good fundamentals in a stock, but it keeps doing this until it washes them out, where you get lower highs. Traders will often try and pick these bottoms, and they don't get anywhere, and then they find that the market doesn't move up enough to get them to enough of a positive price point to take profits, and then it breaks these new lows and just tanks. And often people are trying to pick bottoms in markets, and this structure is what kills them. You probably noticed recently with some of the previous darling stocks that they've had a sell-off that looks a lot like this in the last month. And a lot of traders have tried to pick the lows and they just keep getting washed out as the price drives lower. So we get this basing. So this is the movement that often sets up a good upside move. So we start seeing structured upside. Oops, let me just get my right drawing tool out. And we start seeing new highs just starting to build up. But even this tends to wash people out too, because it'll make these little lower highs that flush people out. I sort of tend to think of it the path of least resistance. So as soon as you get some buyers attracted to the market, it'll wash them out and force traders off the trade. The reason being is price can only move up when you've got traders on the sideline that come in and provide new energy for a trade. So if a stock or a particular trade already has a whole heap of buyers that have already bought, it can't move up with those new buyers. It's like a weight on that particular stock, because there's the only way price can move up from a point where buyers are already on a stock is to get new energy or new buyers from the sideline that bid a higher price than what currently is there. So if there's no new buyers and no new energy from the sideline, it doesn't matter how good the fundamentals are of a stock, how good it's perceived to be. If there's no new buyers bidding at a higher price, price cannot go up. So what'll often happen with price action is that these up and down movements will shake out a lot of traders, forcing traders into that, I don't know what the stock's going to do. Traders on the sideline is what provides energy for a new trending move. And the structuring that generally will happen is we'll get little washout moves, then fast moves up to break new highs, which will start attracting the first lot of buyers. So generally you'll see the traders that are experienced and also insiders, people that start knowing that there's changes in the underlying stock. It might be people inside the company or people that know about things that are being developed in the company. They'll be the ones that start buying in this sort of area. Let's see if that's here. So in this sort of area in here, we'll start seeing new highs, and then people watching from the sidelines will start seeing these new highs, and they'll start jumping on, seeing that there's buyers starting to move to new highs. And so we'll see a little bit of buying. Some will start taking profits, little reactions, but then what we're looking for is accelerated moves, and often these will be quite quick, especially the first legs up. So what we got here is this would be the stage one basing area, and then what we're seeing is a move into our stage two, which is our acceleration phase to the upside. So I'll just put in a little phase two, and we'll move across a bit more without destroying it. So price starts making new highs. Then once price spikes up to levels which most people would not expect price to get to, then we start getting a bit of a topping pattern. And the topping pattern, if we go back to our GEM, generally looks a lot like this structure that you're seeing here. So highs, maybe just makes new highs, then fails to make new highs, and then we start seeing a break of the lows, and then we look for what we call shoulders, which are lower highs that push down to lower levels. So that is a structure that looks like a typical topping pattern, and that's our stage three area, our phase three. And then we have our down period, which is our phase four. So we're looking at four key phases of the market. We've got our basing, acceleration phase, topping patterns, and then our downside moves. Now for us as traders, the optimal areas to look for are these phase two areas, and that is what Braden and myself look for the majority of time. Sometimes also when we're able to make money on downside moves, then we'll look for opportunities to trade that phase four area of the market and look for potential trades there to capture profits from downside moves in the market. Okay, so the other thing I want to mention was I'm going to send through a link of a book that's about 30 or 40 years old, might even be longer now. It's one that really helped me as a trader in understanding these phases, and it talks a lot about relative strength. The guy's name is Stan Weinstein. He's an American who was a trader going back quite a few years, and he has explained in detail these phases of the market and what to look for, and also looking for the relative strength of stocks within these markets. So I'll just get Braden to send that through. So it's on Amazon. It's probably only about $12. You could probably download a PDF version or an online version to read if you're interested in it. But I did find it a good book to understand these phases, and one of the earliest books that I read. So yeah, have a look if you're interested in looking at improving your trading through understanding the different phases of the market. All right, so one of the things that leads us into this phase two is we're looking at what we see as potential phase two areas for some certain stocks. We're looking for patterns in the market, or what's the best word for it? So we're looking at stocks that are exhibiting that behavior of a long basing period and the potential of moving into that phase two. And what we're seeing coming up on our scans is some of these smaller cap gold stocks that are starting to show those characteristics. So I thought I'd go through a couple and just show you what we're looking at, and this might help you with your long-term planning, especially if you're looking to build up a portfolio of stocks, and you might want to weight them to stocks that are potentially hitting these phase two areas. Now, if we're wrong, we need to make sure we always have that money management in place, because the future is absolutely uncertain. We don't know if there's going to be follow through, or if it goes back into a basing period, or there is a change in the market. But what we're doing is defining our risk, looking for reward greater than our risk, and when we see these opportunities, we're just trying to be consistent in the way we enter and exit the market. Okay, so hopefully I can use our software as well as Braden does. Now, how do you get more time on that? Braden? Sorry, I'm going to be chatting to Braden as we go through this just to get the charts. So I want to get a weekly up of that. Okay, so beautiful. So this is one that we're looking at, Tanami Gold. So small cap stock. It's early days yet, but the structure is the sort of structure we're looking at for potential here. And this is something that's built up over quite a time. So you can see that the market, what we see as a topping pattern, occurred back in 2011 and 12. Is this one easy to draw? You can't draw on this easily, can you? Okay, let me. All right. Here we go. So all right, now I can draw on this. All right, so topping pattern. And I think they're always a little bit different, but the structuring and the theory behind it is quite similar. So that high, obviously we had the big highs here, big sell-off. So failure to get anywhere near prior highs, secondary failure, third failure. The best thing about trading is structure takes a while to develop, and you often get more than one chance at trading. But also what that means is that often you can get too early into a trade. But if you structure your risk, then you've always got the opportunity to re-enter. So this is high, equal high, and then the failure. Now, the areas that I tend to look for potential traders, what I call shoulders, so smaller, lower highs. So markets move down, broken key levels, in here. And for me, it's moved up, and the fact that it's failed here, this would be an entry somewhere in this zone between, if I was shorting it. Obviously, this probably being a small cap stock, very difficult to short a stock like this. But for structure, this is the failure areas where we see a move down here. A little bit of strength, people trying to pick the lows of the market, and then we get this massive drop down to lows. Now, these lows have formed over a number of years. So and this is what I like to see, a base that forms not just over months, but to be a sustainable base. I guess like the foundations of a solid house. You want a base that's going to be strong, withstand time. The shorter the time period of a basing period, the less reliable I find that they are. So these ones that form over time, and especially form higher lows over time, this is exactly the sort of structure I'm looking for a move out of the basing period into that secondary phase. So we're seeing a series of nice higher lows. A good thing to do also is to research where this has occurred previously. And if you go back to stocks that you know that have had big runs, have a look at what happened prior to the time before they had big moves. And what you'll find is a very similar structure that I'm pointing out with this basing type period. So big base, higher lows, higher lows. We're just starting to see some action here. So this is small cap gold stock that we've looked at. And the structuring here is ideally the sort of thing that we like to see. All right, so let's have a look at some other ones. Okay, so SLR is another one. So similar sort of structure that's been building, and I've just got rid of it by pushing the wrong button. Let's go back to that. So again, what we've got here is the base. I'll get up sketch again and we'll do it again. Alright, so what we're looking at, base. Now this one's occurred over a different time frame. Oh, it's still around that sort of 3-year period, but we're seeing it's probably moved further ahead, a little closer to our phase 2 area. We're actually seeing some upside, seeing a little retest. Now this is one that we're actively got an alert in place for, and we're starting to see some upside here. So what we're starting to look at is evaluating the moves. You see that as the $1 zone's our first key level on the previous downside move, the first reaction. So likely to be an area where there'll be some sort of profit taking if price does actually get to that point. But our structure, our big market structure, is in place for upside, and the potential here is probably the $2 zone was the previous area. Here you can see the potential upside is many times the current trading price. So these are the structural type trades or portfolio style trades that we like the look of, and we want to give these the opportunity to make some strong upside moves, but at the same time limit our downside risk. All right, has anyone got any questions just on what we're going through? Does it all make sense? And happy for people to disagree. I guess this is the sort of price action structure that I look for to enter trades. And I also think that with this price structure, this is what this is showing. This is actually showing fundamental price structural change within the company, which shows up in price. So obviously but for price to move up from sort of 20 cents up to 60 cents, that's showing the changing nature of the business. It's showing that there's people are perceiving this company now to have better prospects than what it did in the past through maybe lowering their costs of gold production, their ability to extract gold at good prices, and be able to sell that gold at a profit. Those sort of things are coming through from a fundamental perspective, and obviously there's a potential for new finds that are likely to show up in news too. And remember, for people to take a position in a stock that they see has fundamental change, they've got to actually buy that stock at a higher price, the bid price, the ask price actually. I'll get my bid and ask right. The ask price. So they've got to bid at what someone else wants to sell it for to move price. And so by taking a position, seeing a fundamental change in position, they've got to take an active role in buying the stock, which shows up in the price movement. Okay, so that's another stock that we think has good prospects, good risk reward. Let me get up some of the other ones that we're looking at as well. So this one is MOY, Millennium Minerals. Same structure, also showing that it's moving into that phase 2. Has had a strong move up from the 5 cent mark. We're into the 30 cent mark. Previously has been around the 70s. So that same sort of nice U-shaped structure, and you can see that price action has moved out of those saucer shapes to some upside here. We're looking for some setups to be able to trade potential areas there where we can limit our downside risk, but that structure again in play with another gold stock. RSG has moved out of that basing phase and has already moved into the stage 2 phase. So what we saw here was that basing move up, broke those highs, reaction, and then very strong moves to the upside off that 40 cent level up to 230. So you can see that's 8 times potential early entry zones. Maybe let's say we looked at areas around the 55, then we're looking at 400% movement from that first key level there. So the potential out of these zones when it moves from that phase 1 to phase 2, that's the area that we see the greatest gains for risk taken, and that's why we're obviously excited about some of these smaller cap gold stocks and why we're keenly looking at those moves. Now, it doesn't mean with some of these stocks we see this potentially still in a phase 2 move and still has possibilities of moving up to highs from this level. So one of the issues, I guess, as traders that we have is we tend to anchor our thinking to previous price action. So it's very hard for us to comprehend moves out of 35 cents up to $2.35. We tend to think and anchor ourselves to price movement around prior prices. It's a bit of something that's been looked at from that we tend to do. I guess it's human nature for us to do that, and that's why people are very much attracted to sales, because I guess advertisers understand that we have this anchoring bias to prior prices. So when there's a sale that shows sometimes whether it's real or not, a specific price, and then a sale at half the price, it attracts people to actually want to go to those particular sales. Probably getting a little bit off track, but what the point was the anchoring bias that we have means that it's very difficult to structure trades to capture these big moves, and why traders tend to take profits a lot quicker than what they should is that they don't comprehend the price can move to levels way above or way below their current entry prices. All right, so let's have a look at a couple of others. DCN, this is another one that's come out of the base period and moved into the phase 2 area. Very good entry areas. I think we've looked at those as trades previously on our alerts. We've moved up into a consolidation area in here, so we're looking to see potentially if we get another leg up but this one has moved into that phase 2 area. We're looking to see if there's going to be continuation there. So what we're sort of seeing is some of the gold stocks have already moved out of that basing period into a phase 2 area, and we're looking to see if there's going to be more momentum from that phase 2. What we're not seeing at the moment is that sign that it's moved into a topping stage. So as it hasn't clearly moved into that topping area, we see the potential of still more follow through and upside potential with some of these stocks. So big basing and movement to the upside again there. PAN. All right, so this one here, probably not as, it's more of an early stage one. It did go for a run, so I went down to the lows around 20, moved up to $1, but has come back down, moved right back down to new lows over here. So one we're a lot more wary of, but obviously the earlier you capture these moves with limited risk, the potential of much greater rewards compared to the risk taken. So the earlier you are, the more chance you've got of failure, but the more reward you can get to the risk taken. So there's always this counteracting risk reward. It's a bit the less risk you take, the less reward generally. The earlier you take a trade, the more reward potential there is. The later you take a trade, the less reward, but the more skew and more certainty you can work off for a potential trade. Now, I'm not sure on this one. I'll just have a look at this particular stock. Okay, these are all weeklies is what I'm looking at. We see this one probably a relatively short basing period, acceleration, first reaction, and strong move up to new highs. So potentially this one has got a bit of momentum behind it, and we're looking to see if we get another leg. Now, obviously, this sort of straight up movement is unsustainable, but you can see how far from back in 2012, how far and fast these movements can occur, capturing. So this one moved up from 10 cents to 80 odd cents in a very short amount of time. We don't know if this is going to do the same thing here, but you can see that there's definitely momentum. In fact, it's making new highs over the last year and a half at least. Shows that there's upside momentum. And what you often find with stocks making new highs, retracements will be very shallow, so it's very hard to catch those retracements to trade from. So you need to be a little bit quicker if you're looking to capture these moves. And the momentum being quite strong is that often you can miss these moves as they accelerate quite quickly. So a little bit different style of trading if you want to capture these sort of moves. You're looking for very minor retracements and you're looking for momentum. So it tends to mean that you have to be more active and really watching price movement and seeing that buyers bidding into the market, pushing price. You want to see that acceleration move if you're trying to trade these sort of stocks. For portfolio style ones, we tend to like the big basing ones and getting them as they're just moving out of that phase 1 basing into the phase 2 area. All right, so that's basically a roundup of some of the things that I look at, the way I look at trading, the way I guess both of us do, Braden and myself, with opportunities that occur. We're really interested in phases of the market to be able to capture those big trending moves that occur, and trying to get the market moves that are very strong in the market, getting reward much greater than our risk, and doing that consistently. So if there's no more questions, I think we'll wrap that up here, and thanks very much for listening in. And one thing with TradeSetup, as we are in a trial with Commonwealth Bank at the moment, the Commonwealth Bank clients are using TradeSetup on trial basis initially till the end of December. If there's any positive, if you think we're doing a good job with what we're doing, if you're a ComSec client, please relate that to the ComSec people so they keep us. But also, we appreciate any feedback, good or bad, and it also helps us to adapt and improve our services as well. So thanks for taking the time to listen to us. Thanks, Braden, for your work, and we'll catch up tomorrow. Oh, not tomorrow. Tomorrow I'm going to be having a couple of beers and taking it quite easy for this weekend. But on Monday, Braden will be back in. He'll be actually in Brisbane again, so we'll be doing it from here. All right. Thanks, Sharon. I appreciate that. Yeah, thanks, guys. We'll speak soon. Okay.